of the Securities and Exchange Commission highlighted the impact of a stronger U.S. dollar on the naira. He emphasized the role of FPIs in stabilizing Nigeria's forex markets temporarily until traditional forex sources improve. Mohammed Abdullahi, advocating for consecutive significant rate hikes, noted the positive response of portfolio inflows to ongoing reforms and complementary measures. He cited increased month-on-month inflows as a testament to investor confidence in Nigeria reforms, supporting forex market stability. Murtala Sagagi provided data indicating the need for policy innovations and export-oriented strategies to enhance forex reserves, bolster our confidence, and stabilize the naira exchange rate amid fluctuating forex inflows. In concluding remarks, CBN Governor Dr. Olayemi Cardoso stressed the importance of fiscal measures like tax reforms to boost government revenue, reduce fiscal deficits, and ensure sustainable non-inflationary economic growth. He emphasized collaboration between the CBN and fiscal authorities to prevent fiscal dominance and achieve economic stability. The MPC's deliberations underscore their commitment to navigating Nigeria's economic challenges through prudent monetary policies aimed at curbing inflation, enhancing forex liquidity, and fostering unsustainable economic growth amidst global and domestic uncertainties. You're watching ATN Business on Atlantic Television Network. We will be back after this break. Just stay tuned.
Every day, our lives are changed by history.
We are one people, all of us.
Leaders, politics.
Nobody's ambition is what's the blood.
I have fought very firmly.
Natural occurrence, war, and the world economy.
I belong to everybody, and I belong to nobody.
ATN covers it all on ATN Politics today.
From the line across the ocean to the land beyond the mountains, through the Sahara, we bring on-the-spot news, live analysis, expert discussions on trending stories in politics, business, socio-economy, sports, and documentaries. So catch all the updates on the happenings around the globe. Stay focused on the fact today, only on ATN.
illegally. That is amazing.
Honorable
You human trafficker.
Honorable
Welcome back to ATN Business on Atlantic Television Network. Now to the rest of our stories. Forex turnover in Nigeria's official exchange market surged $23.29 billion over 6 months, driven by CBN reforms, data from Atn reveals. From January to June, the Naira traded between 980 Naira and 1,500 Naira per dollar, closing recently at 1,485 Naira. Analysis from FMDQ Securities, the platform tracking official forex transactions, shows a 15% increase to $23.29 billion by June 21st. Transactions involve major players like commercial banks, CBN, and international oil firms. In January, forex sales totaled $4 billion, jumping 46.5% to $5.14 billion in February. March saw a decline to $4.7 billion, followed by $2.5 billion in April. May rebounded with an 84% increase to $4.6 billion. Notably, $4 billion was recorded in January, increasing by $3.3 billion within 2 weeks in February, aligning with new rules mandating banks to sell excess dollars within 24 hours. Further data reveals a stabilization with $890.65 million in mid-February and $953.02 million by month end. March saw improved liquidity with $4.7 billion, but April's figure dropped 51% to $2.5 billion due to Naira depreciation. May, despite a $4.6 billion surge, ended weaker, and June recorded $2.29 billion in trading within 12 days. CBN's policies underpin liquidity, including exchange rate unification, foreign exchange markets liberalization, and backlog clearance, supporting forex turnover. High turnover signals market activity and investor confidence, key for economic stability. The Apex Bank tackled forex speculation and hoarding, clearing a $1.5 billion backlog, stabilizing the Naira between 1,476 Naira and 1,484 Naira per dollar. External reserves rose 2.81% to $33.64 billion by June 2024, from $32.72 billion in May, bolstered by low demand and increased dollar inflows. CBN Governor Olayemi Kadosi stressed attracting inflows to sustain liquidity, stabilize rates, manage inflation, and ensure economic growth. The Naira closed the week at 1,485 Naira 53 kobo per dollar, maintaining stability amidst varied rates throughout the week. FMDQ Securities Exchange reported rates ranging from 1,401 Naira to 1,505 Naira per dollar, with daily turnover at $193.50 million. Stability in the official market aligns with projections of ending the year at 1,450 Naira per dollar as per Fitch ratings. Overall, Nigeria's forex market evolution underscores CBN's reforms' positive impact, enhancing liquidity and stability amid global economic shifts. On Monday, European markets kicked off the week with gains, while Asian benchmarks showed mixed performance following a strong close to the previous week for U.S. stocks. The optimism in Europe was reflected as France's CAC 40 rose by 0.4 to 8,271.36 by investor anticipation ahead of the upcoming first round of voting in the French presidential election. Germany's DAX also saw gains, advancing 0.6% to 18,268.58, while Britain's FTSE 100 mirrored the CAC's rise, climbing 0.4% to 8,271.36. In contrast, Asian markets painted a more varied picture. Tokyo's Nikkei 225 managed to post a modest gain, rising 0.5% to 38,804.65, standing out as the sole major benchmark in the region to show positive movement on Monday. The yen weakened slightly against the dollar, closing at 159.75 yen, influenced by minutes from the Bank of Japan's recent policy meeting suggesting caution in adjusting interest rates until specific economic indicators such as CPI inflation and long-term inflation expectations show robust improvement. However, other Asian markets experienced declines. Hong Kong's Hang Seng slipped marginally by less than 0.1% to 18,027.71, and the Shanghai Composite faced a more substantial drop of 1.2%, closing at 2,963.10. Similarly, Australia's S&P ASX 200 retreated by 0.8% to 7,733.70, and South Korea's Kospi shared 0.7%. South Korea Kospi share 0.7% to 2,764.73. Turning to Wall Street, Friday saw a mixed performance among the major indices after a series of positive weeks. The S&P 500 edged down by 0.2% to 5,464.62, but it remained close to its recent all-time high set earlier in the week, marking its 8th winning out of the last 9. The Dow Jones Industrial Average saw a minor uptick of less than 0.1% to 39,150.33, while the Nasdaq Composite declined by 0.2% to 17,689.36. One notable mover on the markets was Nvidia, which faced a 3.2% decline. Despite its recent market dominance driven by demand for AI technology, Nvidia saw its stock struggle, leading to its first weekly loss in the past 9 weeks. The company had briefly overtaken Microsoft in market valuation earlier in the week, underscoring its influence in the tech sector. In the bond market, U.S. Treasury yields initially dipped following reports indicating weaker than expected business activity in Eurozone countries. This initial pressure reversed course as subsequent reports suggested stronger U.S. business activity, particularly in manufacturing and services sectors. S&P Global reported that overall output growth hit a 26-month high, a positive sign for the U.S. economy. This economic strength occurred amid concerns about inflation, prompting close scrutiny by the Federal Reserve. The Federal Reserve faces a delicate balancing act aiming to curb inflation without stalling economic growth. The inflation hovering above its 2% target, the Fed is considering the timing of the interest rate adjustment to achieve sustainable economic stability. The recent economic data indicates robust output growth without significant inflationary pressures, providing some reassurance to market observers. In commodities trading, U.S. benchmark crude oil prices rose slightly, with West Texas Intermediate WTI gaining 15 cents to settle at $80.88 per barrel on the New York Mercantile Exchange. Brent crude also saw a modest increase, adding 22 cents to reach $84.55 per barrel. The euro strengthened marginally against the dollar, rising from $1.0693 to $1.0717. As global markets navigate economic data releases and geopolitical developments, investors remain attentive to forthcoming elections and central bank actions. The mixed performance across international markets underscores the complexity of current economic conditions, influenced by varying regional factors and global economic indicators. Looking ahead, our market participants will continue to monitor economic reports and central bank communications for insights into future market trends and potential investment opportunities. Stock futures opened the week on a mixed note as markets geared up for the final week of June and the first half of 2024, hovering near record highs. Nasdaq Composite and S&P 500 futures showed minimal movement, indicating cautious sentiment among investors. In contrast, The Jones Industrial Average Futures climbed 102 points or 0.3%, suggesting a positive start for the blue chip index. The S&P 500 reached an intraday record of 5,505.53 last Thursday, extending its winning streak with a gain of 0.6% for the week. This marked the 8th positive week out of the last 9, highlighting the index's resilience despite recent concerns over market exhaustion, particularly driven by the sell-off in Nvidia. The chipmaker faced a 4% decline last week, compounded by consecutive drops exceeding 3%. Nvidia's brief stint as the most valuable company in the U.S. was followed by technical analysts noting bearish patterns in the recent trading. Katie Nixon, CIO at Northern Trust Wealth Management, emphasized that while Nvidia remains fundamentally strong in the AI sector, its rapid price escalation may encounter hurdles moving forward. The extreme price performance may face some speed bumps going forward, not an indictment of the fundamentals of this AI behemoth, but more caution around how far the stock has moved and how quickly, Nixon remarked. Despite these fluctuations, the broader market has benefited significantly from the AI sector's growth, contributing to the S&P 500's impressive 15% year-to-date gain and achieving 31% record closes. Looking ahead, investors are closely monitoring economic indicators such as May's personal consumption expenditure data, crucial for the Federal Reserve's assessment of inflation trends. The outcome of this data release, scheduled for Friday, will likely influence market expectations regarding future interest rate decisions. Moreover, this week features pivotal earnings reports from major corporations including FedEx, Micron, Walgreens Boots Alliance, and Nike. Notably, RXO saw its shares surge more than 11% following its announcement of acquiring Coyote Logistics from UPS for over $1 billion. RXO's CEO Drew Wickerson highlighted the strategic benefits of this acquisition, anticipating substantial revenue and earnings growth along with significant returns for shareholders. In the cryptocurrency space, Bitcoin experienced a sudden 4% decline on Monday, contributing to its June losses amounting to 9%. Despite these setbacks, Bitcoin remains notably higher by over 44% year-to-date, underlining continued investor interest and amid market volatility. Across the Atlantic, European markets exhibited mixed performance at the start of the trading week. The Stoxx 600 index opened flat, with sectors and major bourses showing varied movements. The UK's FTSE 100 index edged down by 0.04% to 8,235, while Germany's DAX rose by 0.21% to 18,202. France's CAC 40 and Italy's FTSE MIB also saw modest gains, up 0.16% and 0.5% respectively, reflecting regional nuances and investor anticipation ahead of economic updates and potential interest rate decisions. The S&P 500's recent performance includes noteworthy statistics, such as its uninterrupted streak of 377 days without a sell-off exceeding 2.05%, marking the longest such stretch since the Great Financial Crisis. Additionally, the index has not recorded a gain exceeding 2.15% during this period, underscoring both the market stability and limited volatility in recent times. As global markets navigate through a mixed landscape of economic data, corporate earnings, and sector-specific developments, investors remain vigilant about potential shifts in sentiment and economic policies. The convergence of technological advancement in AI, fluctuations in cryptocurrency markets, and regional economic dynamics will likely influence market trajectories in the weeks ahead. Amidst these factors, market participants continue to seek opportunities while assessing risks associated with inflation, interest rates, and corporate earnings reports. This is why we wrap it up on this edition of ATN Business on Atlantic Television Network in the city of Port Harcourt. I am Susan Abbey. We are open for advert placements, bookings, and commercials. Stay connected on Atn socials, Facebook and YouTube, Atlantic Television Network. Instagram and TikTok, Atlantic TV Network 1. X, formerly Twitter, Atlantic TV Net. You can also watch us live on our website, atlanticnetwork.tv. Peace and unity are the pathways to progress. Thank you for watching.